Alright, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and what a day in the market it's been. It's been pretty tough. I think my account is down maybe 10% in the last week. It's been pretty rough. It's been pretty painful, but we've been here before, as we've seen earlier this year in March, April, May time, and even at parts of last year in September, October. So let's take a look right at the Finviz Map right now today. Microsoft is down 2.85%, Apple is down 1.59%, Adobe down 8.59%, Nvidia down 5.37%, Google down 1.49%, Amazon 1.74%, Tesla 5.91%, and AMD down 5.35%. We do have some green names like the telecom sector, healthcare and J&J, Pfizer, even consumer defensive with Walmart, Costco. Dollar General is actually having a pretty green day, Pepsi. But then you take a look left at the financials, again getting decimated. Visa down 1.1%, PayPal down 3% again, JPM down 1.64%, and the Bank of America down 1.4%. It's been a pretty red day depending on how you built your portfolio, especially when you take a look at the Nasdaq down 2% today, which is very significant. Whenever the Nasdaq is down more than, let's say, 1%, 1.5%, it's a pretty rough day in technology, especially over the last 5 days. It's been super volatile, as we'll take a look at the VIX. We were all the way back at about $400 this past Monday, and we had a really volatile week, straight down to 394, right back up to 400, and only over the past 2 trading days. Since this past Wednesday, we've fallen from all the way from 400, almost 5% to where we are today, and that's pretty significant. That's a pretty rough ride for the Nasdaq so suddenly, so quickly. And it's similar to turbulence on a plane. When you suddenly go down relative to where you just were 2 seconds ago, it's a scary feeling. It doesn't feel very good. It's much more easier to digest if this 5% had fallen over, let's say, 2 or 3 weeks. It would have still sucked, of course. It's the same result, but it's a lot smoother. You can stomach it. Okay, we're down another 0.5% today, another 0.5%. But when you suddenly go down 1%, 2%, 3% in a sudden succession, it's not fun. People are going to freak out. There's going to be panic. It's going to cause more selling. But again, as an investor with a long-term horizon, you look at it as discounts and sales over the long term. And I want to bring your attention to the Nasdaq options that expired today on December 3rd, and scrolling down to the put section. And I want to see where there is a lot of open interest when it comes to strike prices. So the two that I see over here, the first one being the 380 mark has about 26,000 open interest, and the 385 has about 34,000. So right now we're at about 382, and it's most likely that we're not going to fall below the 380 mark because Wall Street doesn't like expire these contracts worth anything, because usually it's Wall Street that are writing these options, and as we know, most options don't expire worth anything. About 70% of options expire worthless, and usually it's retail buying them up, especially the ones in the short term, and Wall Street is taking premium like a casino. And this is why I like selling short-term options and buying long-term dated ones, because you never know in the short term how fast things change and how quickly they do. And as fast as this quick turnaround has been over the last 2 days, would it be surprising if next week we had a quick turnaround toward the upside? I mean, who knows what's going to happen, but it wouldn't be surprising, because usually when you have a big fall, it's not uncommon to see some kind of sharp recovery in the short term, like whether it's going to sustain or whether it's a bull trap or not. So let's take a look at some other names that are dying today. So for example, ARK Invest down another 7% at $92. This one had a 52-week high of 159, now at 93, absolutely decimated. Coinbase down another 7.44%, and this one was just above, I think, 330 just a few days ago. And now it's down so much. We see where it opened up at 286, now trading about $20 lower at 265. Oof. Anyone in Coinbase is feeling the heat. Neo stock down 10% today. This one just fell yesterday, and now again, it was near 40. Now we're trading at near $32, down 10% for Neo stock. Rivian, no surprise here, a zero revenue company. Usually those ones are the ones to fall first, and this one isn't even one of the worst of the day, but again, nonetheless, down 7% pretty much. DraftKings, this one was just $40 just a few weeks ago, now trading 10% lower at $28. Where is the bottom for a lot of these stocks? Lucid Group down 7% today at about $45. So just nothing is safe. No high growth names are safe. Enphase down 6.71% at $219. Unity Software down 7%. Beyond Meat at $64. This one had a 52-week high of $221. That's what, like 70% lower or something? Like, that's unbelievable. Beyond Meat. Corsair Gaming at $21. Tattooed Chef at $15.38. Alibaba at $112. This one was just $300 a year ago. Now trading at $112, just where is the bottom again? Teladoc Health, $90, one of Kathy Wood's favorite stocks, down 6.7% today. DocuSign, 40.4% down on the day, and one day after their earnings call. Unbelievable. DocuSign, one of the pandemic favorites, down 40%. Matterport down 11.33%. This one's had a pretty good last few months, but man, 11% again is just so much pain in the market. Mara, a Bitcoin miner, a crypto miner, this one was just $80 like a month ago, and it's just sliced in half, down another 11% on the day. And Lightspeed, a stock that was doing so well, again, is down 35% over the last 6 months and 7% today. Again, so many of these stocks hitting 52-week low after 52-week low after 52-week low. Another one of my stocks, a very good food company, same idea. It just keeps finding a new low day after day after day. The pain just doesn't stop, and eventually there will be capitulation. Eventually the buyers will step up. But the lower these goes, the better the reward is going to be over the long term. The more pain in the short term, the more potential reward long term. And when you turn your attention to a couple of ETFs, the first one being VIG, which is my favorite value ETF, this one's only down about 0.35% today. So if you're a more conservative investor, but you still want some growth, I love VIG, again, only down about 0.3% today, as well as MGV. Both of these very low cost ETFs. I think MGV is 0.04% as a management expense ratio, and for VIG it might be 0.07%, but that's $4 or $7 every $10,000 invested. This one is pretty much break even on the day, considering all these other names that are down 5, 10 plus percent, and these ones are barely down today. So you can see, depending on what kind of investor and where you put your money, you'll get those kind of results in the short, medium, and the long term. And the candlestick chart that I want to bring your attention to is the VIX, the Volatility Index. And we're actually seeing something we haven't really been seeing over the past few corrections or down cycles. So usually what the VIX does is it spikes, it doesn't stay there for very long, and then it sharply comes back down. And we can see that the last few times it's occurred, over here in September, here in August, in July, in May. But if you look at times like October and in March of this year, what you'll notice is that the VIX kind of sharply goes up, comes down, and then goes back up again and sustains those levels. And we see that actually what's happened over the past week is that we jumped up and we've actually been sustaining those levels over the past week or so. And what does that tell us is that there's been fear in the market, and that fear has been sustained over the past week. Now, is that time for concern? Not necessarily. Again, if you had bought during any one of these VIX spikes when the fear was high, you would have done pretty well for yourself to this point, but that doesn't necessarily mean that's going to happen the next time, or over the next 3 months, or over the next 6 months, or even over the next year. What if 2022 isn't that strong for the stock market? You can't say it's not possible. It definitely is. It'll suck again in the short term, but maybe that's the best thing for the market if it does have some kind of breather. But sometimes that's the best thing for the market, whether it's for a full year or half a year or for a few months even. This allows the market to reset and continue its likely path toward the upside over the upcoming years. So what am I doing? Firstly, I'm not panicking. We've been through this before earlier this year between March and May or so. It was a pretty rough time. Even last year during the correction in September, October, it was a rough time as well. There was a lot of pain in the market. But as we've seen time and time again pretty much over the last decade, if at any point you sold out when the market was dipping due to any type of fear, usually the market did recover over the medium to long term. And yes, it could be different this time, but depending on what your time horizon is, again, no one can predict the market or some kind of black swan event. That if you're in it for the long term, just hold, and if you have the cash, buy that dip, have predetermined prices of what you'll buy and when you'll buy it. I had some names in my portfolio I ended up cutting because I had less conviction in them and put them into my higher conviction names that I have no problem buying on weakness. Here's a rule of thumb. If you can't buy the dip on a stock that you initially bought higher, after the stock has dipped 40% from where you first bought it, you probably don't want to own that stock for the long term, because I promise you, some of your stocks will go down a lot faster and a lot lower than you think they ever will. Otherwise, that's the end of my video. Thank you very much for watching. If this is your first time watching the channel, welcome aboard and hit that subscribe button. As always, hit that like button, and I'll see you in tomorrow's video.